And we have Thomas Hayes, Chairman and Managing Member at Great Hill Capital, joining us for more now. Thomas, let's just help us take a look at why investors are pivoting back to cyclicals and stocks and those names tied to the economy, which of course help to push the S&P 500 higher overnight.
Well, Liz, this is a theme that started over the summer. And basically what you've been seeing since the beginning of the year is the Magnificent Seven, or large cap tech, had 50% earnings growth, and that is decelerating to about mid-teens earning growth by the beginning of 2025. Whereas the unmagnificent 493, or the economically sensitive stocks, as you referenced to their earnings growth has been accelerating. It was negative in the beginning of the year, and it's turning positive, and it's going to move into mid double digits next year. So I think people want to start to slowly add into the economically sensitive stocks. They're more cheaply valued, and their earnings growth is going up versus going down.
Yeah, and so with that comes the rotation out of big tech. At the same time, the tech names, they continue to say that the AI theme is very much intact still, despite some worries in the semiconductor sector. How are you approaching investing in the sector? And also, the sort of approach that the new Trump administration could take with the tech industry?
Yeah, well, I think people were eager to get through the NVIDIA earnings report. It missed the whisper numbers. The guidance was a little bit mixed, but it was good enough to get the market through. The issue with NVIDIA is there was a time that as the stock went up, it became cheaper because the multiple was coming down due to growth in profit margins. That's no longer the case. The profit margins have stopped increasing. The growth is decreasing. The multiple is going up. So while they could probably have maybe a couple quarters of some stock appreciation, I think a lot of that's slowing down, and managers, as they get into the next year, are probably going to have to lighten up as it's become a larger and larger part of their portfolio. As far as big tech, I think people are finding other opportunities. If you looked at Deere today, was a big gainer, but the biggest gainer, you mentioned the Dow, you mentioned the S&P, you mentioned the NASDAQ and the difference in performance, but the biggest performer was small cap stocks. They were up 1.5% today. And those are the biggest bang for your buck moving forward. You get the most amount of growth over the next year for the least amount of multiple. And I think you're starting to see more and more people broaden out, looking for opportunities under the surface as maybe the indices gains led by large tech start to slow down a little bit, or certainly normalize relative to the past 2 years.
Yeah, and actually we see small cap, starting to pick up pace as, calls for a Trump victory kind of firmed up. And so, when we look at the so-called Trump trades, it has been a bit of a volatile movement. I mean, right after the election, it was really good. Of course, could be fueled by sentiment as well. But then we saw a bit of softness, and now it's back up. Where do you expect them to go from here? And what is it exactly that investors are searching for right now?
Yeah, Liz, well, it's interesting because there were two Trump trades in Trump 1.0. So you had the election in November of 2016, followed by the inauguration in January 2017. What happened after the election was different from what happened after the inauguration, meaning the dollar rose right away after he was elected and bonds fell, yields went up. But after the inauguration, the dollar re-weakened and bonds got bid and yields came down. And I think the two biggest surprises of 2025, Liz, are going to be yields come down and the dollar goes down. And right now, people are positioned in the exact opposite way, and we might be at the peak of that. The other thing that people expect from a Trump administration is that energy will do exceptionally well. That was not the case in Trump 1.0. From the election to the inauguration, energy stocks did extremely well. After the inauguration in January, energy did very, very poorly in that first year of the Trump administration. As you get more supply, margins are compressed, earnings power is compressed for the energy companies. And I'll tell you another thing that did extremely well, that again did poorly after the election and did very well after the inauguration, was emerging markets stocks. They did extremely poorly once he was elected and extremely well from 2017 to 2018 after he was in office. You had one of the biggest rallies in emerging market stocks in the shortest period of time. And that's including he was elected on tariffs, he was elected on protectionism, and those stocks still did well. So we're in for a lot of positive surprises in 2025 that people may not yet be positioned for.
All right, Thomas, appreciate your insights and helping us look ahead of what we can expect when the inauguration rolls around. Thomas Hayes, Chairman and Managing Member at Great Hill Capital.